What's up, traders? Andrew O'Connell here with Pristine Capital. Let's talk box scores for the market, and then we will take a deep dive into our inflation report. S&P 500 finished the day down 2.9%. NASDAQ QQQ finished down 3.53%. Our IWM small caps finished down 2.71%. Our dogs of the Dow Jones finished down 2.67%. Our ARK Innovation ETF finished down a whopping 7.15%. You can see pretty much all of these indices closed at the very low end of their day's range. And interestingly enough, we had a volatility pop, but it is nowhere near the level that I would expect given all of this downside in the market. Like, look at this, for instance. At the QQQ was down about 3.5%. The volatility of the QQQ only went up 3.79%. And the volatility of the Dow Jones actually declined. So that was the one oddity here. And then we had completely washout breadth for today's session. We had 89.2% down volume. And my trend model, which flipped into a -3 reading yesterday, remains at a -3. And this all came on the back of the CPI inflation report that dropped this morning at 8:30 a.m. So remember, this commentary from Raphael Bostic from the Fed, this came out about a month ago. Pausing at the Fed's September 20th to 21st meeting, which Bostic said might make sense, will probably require two tough conditions to be met. The first is inflation slowing meaningfully, and the second, signs that the US economy is cooling enough. So that inflation slowing meaningfully was not really met based off of today's inflation report. Check this out. We had our core inflation data come out as well as the non-core, and our month-over-month numbers, we had 0.6% month-over-month increase for core inflation, and the consensus was a 0.5% increase. And then we had for our non-core a 1% increase, and the consensus was a 0.7% increase. And look at core. So the previous core reading was 0.6%, and this one was 0.6. So you can say at least that's not an acceleration, but the non-core data actually was an acceleration from the prior month. Prior month, we only had 0.3%. This month, we had a full 1% increase. So that's exactly what we do not want to see. And take a look under the hood here. These are really some of the drivers. So you'll notice on this left-hand side, this is the percentage weighting of each of these components in the total CPI figure. So like, for instance, the really big components, food's a big component, energy, and then over here, shelter is a very big component as well. Look at some of these numbers that we saw. So food was a big contributor. Energy, look at this. It has an 8.3% weighting in the basket, and that had a 3.9% increase. And then you can see as well, motor vehicle parts had a 1.39% increase. And then shelter makes up a huge part of the basket. In the prior month, we had a 0.51% increase in shelter costs, and this month we had a 0.61% increase in shelter costs. Oddly enough, the bond market pretty much got this right heading into the print. We noticed over the past week that treasuries continued to sell off, even though the equity market remained buoyant. And I mean, again, the biggest contributor by far was energy. And take a look at the energy chart. I mean, just look at crude oil. And remember, this is for the month of May. Check this out. Crude, so if we look back to the beginning of May, which is right here. So we have from May onward, this range, I mean, look at what crude did during May. So it went from about like $100 a barrel all the way up to, almost $115 a barrel. So what's very interesting is, we got this big shock move in the market. We know a lot of this move was primarily driven by inflation. So to be honest, moving forward, what I'm asking myself is so we had that big move higher in energy in May. In order to get a further acceleration, we would need an equivalent move in energy. So that would mean we would need energy to get up to probably $135 or $140 a barrel by the end of June. We'll see if that happens. But yeah, to be honest, now it's really interesting, looking under the hood at those numbers, you can really sort of pick things out as the month goes by. So yeah, very interesting. I'm definitely going to be thinking about that inflation report and how I can potentially create one of my own and really just get more acquainted with those components, because those inflation prints, they're just super important, as we have this inflation problem. Let's take a look at our Finviz heat map. You can see pretty much everything got demolished today. Sector map, we had the gold miners were up 4.76%. Very interesting. MSOS, the cannabis ETF, was up 1.36%. And KWEB, these Chinese internet names, they actually finished out flat. They were up 0.16%. But you can see we had pretty much a huge bloodbath across every other area of the market. We had semis down 3.5%. Home builders, look at this, down 4.3%. And you can see what closed at a better portion of the day's range versus what did not. Style factors, oh my gosh, high beta got absolutely licked, down 4.37%. Growth was down 3.72%, a beatdown across the board, team. And let's go into our indices. We're going to touch a lot further on this in our Pristine Capital weekend market analysis video, but let's go through the broad strokes of some of this damage here. So take a look, we had this really nice move higher from about, very late May on. So it's kind of interesting, like this rally started, we'll say it started May 24th, and now pretty much we're trading back down to where we were about 2 to 3 weeks ago. So it can always feel like, oh my gosh, like this is the craziest thing that's ever happened in my life. But I mean, if you were doing okay 2 to 3 weeks ago, you should be doing okay today. We had this consolidation, and then I believe it was on like Tuesday, it was like 2 trading sessions ago. Yeah, on this candle right here, this is where my trend model flipped off of the +3 reading. And take a look at, just this downside. Now we're below the 5-day EMA, 10-day EMA, we're below the 20-day simple moving average as well. And the downside so far has been contained by this monthly value area low. So that's going to be the real test moving forward into next week. Do we continue and actually potentially undercut these lows that we made on, it looks like May 20th. Yeah, the low for May 20th, that was at the 3,800 level. We will have to see. As of right now, the market just made a higher low, but anything is fair game for Monday. And when my trend model is at a -3, I want to make sure I'm not anticipating any turn in the market. That's the key thing for me with my strategy. Cannot anticipate, have to react. So when my trend model flips from -3 to -1, that's when I know, okay, I can get a little bit more aggressive. But for right now, I want to make sure that I'm not adding new long positions. I want to make sure that my percentage of winners that I have in my portfolio stays at a healthy level, because the only way you can really draw down your portfolio is if you start accumulating losing trades. And this thing could turn around on Monday for all I know. This thing could take much longer. So yeah, it's really just, trusting the process, following it, and making sure to not get overzealous and really just try to hero trade. Our NASDAQ, this one did not quite make it all the way down to this monthly value area low. Take a look at the Russell 2000. The Russell 2000, this is also making a big higher low here as well. And we touched down to our monthly point of control, and that's where we found support. Dow Jones, let's check out the damage here. The Dow Jones, yeah, made it just a smidge underneath this monthly value area low. Now what's very interesting is like the VVIX, for instance. The VVIX basically just put in a doji candle. It was only up 0.94% today. And like the TDEX, which I watch as a measure of tail risk, this thing was up 33% at one point today. And it closed with like a doji candle. Same thing with the VIX. Like, I would have expected that the VIX would blow out. Like, this could have easily been like a 20% day on the VIX or something of that nature. Still put in a green candle, but we actually put in a long upper wick on this. For me, it's kind of looking like, hey, we could end up making a higher low here, because I think a lot of other investors, they might be thinking the same exact thing. Okay, once we get this shock out of the system and everyone just kind of blows out of all their equities again, what are the odds that energy has another move like that? And odds are the next inflation print is not going to be as bad as the one that we just had. But yeah, for today, it was all about just making sure my winning trades are not flipping to losers, that sort of thing. Did attempt one day trade. And so I got long the SPY common shares for 393 spot 27. And just put this on as a day trade, just in case the market had some sort of like intraday bounce. I ended up closing this one out towards the bell. And I took about a 0.5% loss here. So I just wrote here, have to maintain the discipline in the -3 environment, no accumulating losing positions. So I sized this one very small. This was a 1-star trade. I made sure not to use options. That could have been like the worst thing ever. So for this is just like a little paper cut, if that, 0.5% loser. But other than that, I did no trading. What's very interesting is, like, you know, for me, as I look at my position log, pretty much everything that I added on the lows in May, I'm still in a green position on it. So I want to make sure that if this market gets really ugly and some of those trades start flipping back to break even, I'm closing those out. And again, just making sure that in this negative sequence, I cannot hold, like, you know, under 50% winning trades, because again, that's the only way to really have a big drawdown. With that being said, we made it through the CPI report. Crazy finish to the week. Hope you all enjoy the rest of your weekend. I will see you all on Monday.